When it comes to consistently catching clean market moves, most traders struggle because they enter too early, too late, or completely miss the structural shift happening on the chart. The indicator we're breaking down today helps solve that by mapping trend, structure, and momentum automatically. It's built on three core ideas: the EMA trend, price swing structure, and breaks of structure. Instead of relying on a simple moving average, this tool measures the EMA's slope and acceleration so you instantly see whether momentum is strengthening or fading. At the same time, it automatically detects swing highs and swing lows, which form the foundation of market structure. Using those swings, it creates support and resistance zones. Finally, it highlights breaks of structure, which signal whether the trend is continuing and where clean entry opportunities form. The indicator is called EMA Market Structure BOS Waves, and you can add it straight from the TradingView indicator library. Once it's on your chart, a few settings matter more than the rest. The EMA length controls how sensitive the trend line is. Shorter lengths react faster, while longer ones create smoother structural behavior. The swing detection setting determines how significant swing highs and lows need to be before the indicator marks them. Larger values mean fewer, stronger structural points, while smaller values show more frequent shifts. The SR boxes are automatically created zones based on swing points, and they mark areas where price has previously reacted. These tend to be important levels during entries. Break of structure labels should always stay on, because they serve as your confirmation signal. Finally, visual preferences like colors or background shading don't affect performance. They simply help you read the chart more clearly. To take buy trades using this indicator, you first want the market to be trending upward. The EMA should be angled upward and showing bullish momentum. Wait for price to first do a break of structure and give a BOS signal, then wait for pullback into an SR support zone created by the indicator, and then a candle close outside. This ensures you're buying at a discount rather than chasing the move. You can enter the buy trade, placing your stop loss below the entry candle or most recent swing low. Targets will be at least 1/3 risk to reward. Sell trades work similarly, but in reverse. You want price trending downward with the EMA sloping lower. Wait for a break of structure, then wait for a pullback into an SR resistance zone. When price rejects this area, that's your confirmation to enter a short. Place your stop above the entry candle or recent swing high, and again target of at least 1/3 risk to reward. This entire approach revolves around three simple ideas: trade with the trend, enter after a pullback to a key level, and confirm continuation with a break of structure. It keeps your entries disciplined and reduces the need for guesswork. Don't forget to backtest before you take any real trades. Stay disciplined and keep learning from TradeXA.